not having a broker and trading direct through an exchange challenge a trader, and what awarenesses should they have?
Yeah, that's a very good question, Alex. So the differences in the crypto realm is that you don't have intermediaries that are acting on your behalf and then engaging with an exchange. So we have a broker system. If I'm trading Forex or equities or commodities, you'll have someone who is making good and marking to market. So he has your money and he's holding the money of the other person of the trade. When you go direct to an exchange in the crypto realm, you're actually putting your order yourself into either the bid and ask ladder. And in the crypto realm, particularly when you move away from Bitcoin and some of the other majors, there's quite big gaps in the liquidity between the different coins. So the bid and ask spread can be quite fast. So you've got people offering the lowest offer for purchases here, and then you've got all the bids and the highest bid is here. And there can sometimes be quite a big gap. So you come to the market and you've got to decide, do I really want to rush my way in as a buyer and hit the lowest ask, or do I just want to jump ahead of the highest bidder and hope to get filled? But if the market keeps moving up and away, you get left out, and that has the fear of missing out moment in you. So you have to, you need a methodology, otherwise you end up overpaying at that spread, and it's something to watch.
Are there any differences in feel or character when you're trading cryptocurrencies? And is there anything that people should watch out for? Are there advantages, disadvantages?
Yes, liquidity is one, which I kind of touched on. There are things you need to be aware of. So if you're moving any size, you may get lots of different levels of fill. So it's not like Forex. If you're moving from a currency in a foreign exchange environment, usually you're rarely going to be significant. You are literally a mouse in a room full of elements. In the crypto realm, especially in the smaller coins, you can actually move the market slightly if you're just panic dumping your stuff. So you have to finesse your order process a little bit more carefully. It's one of my big learnings. There are many other aspects of trading in the crypto realm that will come up, I'm sure, in other questions.
What approaches would you say are supportive when you're trading in the cryptocurrencies markets?
We are very fortunate because we have a methodology that focuses on trending, expanding markets, continuation patterns. So my methodology is one of the M's, is very, very powerful. We also have a very mindset focused, so we will look at process so that you're not reacting emotionally. So there's two M's in there. And then the market is the third one. We have this highly expanding market, which is having a lot of new money coming in. So it's growing, it is trending, and when it rests, it often creates continuation patterns. So we've got this beautiful opportunity at the moment where we happen to have a great methodology for exactly that kind of market for exploiting it at the moment, as well as a good mindset and process for it, which incorporates money management. So lots of M's in there, and that's what makes this really a powerful and unique opportunity at the moment.
You mentioned archive investing over trading with leverage. Do you think traders should also have a portfolio approach when trading?
So yeah, it's a good point. So the key thing I feel about the cryptos is that if you stay in the game for the duration of the expansion period, you're going to have done well. The key element is not being blown up in the process. So by virtue of it being highly expansive, it is already very volatile. And there are pullbacks. It isn't always only straight line up, although there's been lovely run-ups. And what tends to happen is people get greedy and they engage leverage. Now, leverage, when you add leverage to an already volatile market, people get shaken out. So we've had a number of instances, particularly as this is an early doors industry and the exchanges aren't exactly perfect, et cetera, et cetera. The bid and ask spreads aren't always deep with high liquidity. We've had very big cryptos like Ethereum, which is second biggest by market cap, actually trade from 300s, and actually someone got a fill at 10 US cents in a panic moment, just because there was a lack of depth. And what happens is people are leveraged long and they become forced sellers because their equity then falls. So my guidance would be do not use leverage. The markets are volatile enough. Make sure you can hold on and stay in the game. So the key is being able to stay in the game, avoid leverage.